Okay, I see everybody's interested in investing in the stock market. I was too. It's exciting. It has its highs and its lows, but I have a plan. So I don't get too emotional when the stock market goes down. I actually don't get emotional at all. It's a roller coaster, and you enjoy the highs and the lows. So investing in the right stock means that I'll roll with that tide, knowing that if I lose some money on any given day or on consecutive days, that eventually the stock that I picked will go back up. So I'm going to tell you about the stocks that I invest in and why I know that my stocks are solid, and I might experience some dips going down, but I'm going to continue to see a trend going up. So first things first, your budget. Your budget is on point, right? It has to be, because you need to know how much you are going to be able to invest in the stock market. That's number one. Number two, so since everybody's excited, I meant to say by the end of this video, you will be able to start investing in stocks. I'm going to give you what you need to start trading in the stock market. So we said budget. Number two, you need a trading platform. So right now I use Webull and Robinhood. I prefer Robinhood. Webull was sent to me by my friend that I was telling you about that asked me if I traded stocks, and I talked to him about what he knew. So that was my first platform. And then I heard everybody talking about Robinhood. So I decided to also join Robinhood. I like Robinhood because it is simple. I mean, extremely simple. You can see everything. And in a later video, one of the next series of videos, I'm going to give you a breakdown of one of my stocks and show you exactly what Robinhood looks like. Super easy. Webull, and if you Google Robinhood and Webull, you will actually see that Robinhood is a beginner platform. Webull, you do need a little bit more experience to know what you're looking at. Once you start investing and you understand what the letters and numbers are that you're looking at, you might want to go over to Webull. But honestly, you can trade the same things on both platforms. So the only reason for opening another account is to cover stocks that you can't trade on Robinhood or Webull. For instance, you can't trade penny stocks. So I know a lot. That's what got me interested. Penny stocks. I hear people talking about penny stocks and getting rich on penny stocks. But the only trades that you can make on Robinhood and Webull are stocks that are traded on the New York Stock Exchange. So they've already gone through the minimum requirements to make it to the New York Stock Exchange, whereas penny stocks are companies that are up and coming and haven't yet gotten the requirements met to be able to trade on the New York Stock Exchange. So that's like the simplest way to look at it. So my first stock that I decided to invest in, I told you I'm a sneakerhead, so I had to go to the sneakers. I said, you know what, I'm spending all of this money at Nike. I need a return because my sneakers aren't an investment. So my very first stock was Nike. Nike has gone up since I purchased it. And like I said, it dips some days, but it's gonna come back up. The stocks that I invest in right now are all solid stocks. I don't want to tell you exactly what I invest in because I don't want to sway you. But what I would say is where you spend money every day or on a regular basis. So if there's a particular clothing brand that you're into, chances are they do trade stocks, and you can buy their stocks. Things that you invest money in, get something back. So buy some stock. Airlines, clothing companies, sneaker companies, food companies, things that you use on a daily basis. Do some research, Google that company and Google that stock and see what the market has to say, or see what other people are saying about that stock. Don't just take one person or one site's review of a stock. Make sure you do a little bit of homework to know what you're investing in. But like I said, the stocks that have been around for a long time, those are the stocks that you want to invest in, because those are the stocks where they're not called risky stocks. You're not gonna lose big. So a stock that might be new to the market or have only been around a few years, those are the stocks that are considered risky, and you might take a gamble. So the stock market is kind of like going to the casino. You don't know if you're gonna win big or not, but the stocks that are solid stocks where you know you're not going to lose money, you're not going to have big gains either. It's going to be steady. So as of shooting this video, I've been in the stock market a little over 30 days. June 13th, that was my open date, which is a Saturday, and I want to talk to you about trading off market as well. Don't do it. Not to start anyway. So in that time, I invested a smaller amount, and in total in Robinhood, I have invested $1,700, and I have made a $100 profit in 30 days. So that's just equity in the money that I have put in. I do own some riskier stocks, and I am in the red, which means that I am losing money on those stocks. But the majority of my money, and when I say I'm investing in risky stocks, I'm talking about like 20, 30, 40, 50 at most am I investing in riskier stocks. My Nike and other tried and true stocks, that's where the majority of that $1,700 is invested. So like I said, I initially took some money from my savings account, and then I've been adding as I go along into my stocks. So the biggest difference between Webull and Robinhood that I like is that I said Robinhood is simple. So if I want to buy $50 worth of stock, regardless of how much that stock costs per share, I am going to buy $50. On Webull, you have to know, number one, how much the stock costs, which they do tell you. You then also have to say how many shares you want to buy, and then they will tell you what that costs. So you have to transfer that exact amount into the account in order to buy the stock. So if it comes to like $113.14, that's what you need to put in. Whereas if you have $100 and Nike stock right now, so when I bought it, it was like 130 something. And it's, I think today, so everybody took a hit today. But Nike is trading, I think, around 160. So if I wanted to buy $100 worth of Nike stock that is $160 a share, I would get, Robinhood would tell me the percentage that $100 would get me. Here's why you don't want to trade after hours. So after hours numbers fluctuate because there's market activity after the stock market closes. The stock market is open from 9:30 a.m. to 4 p.m. Monday through Friday. They're also closed on holidays. So you can make trades after hours, but if you buy, let's say, Nike stock, and if it's, and I'm just going to use round numbers for you, if it's $100 in the after hours that you hit purchase, $100 a share, and you say I want to buy one share, when the stock market opens at 9:30 a.m. on Monday, the number could have changed in the after hours. So you can't technically buy that stock until the stock market opens. So if it opens at $105 and your purpose was to buy one share of Nike, then you'd end up buying less than a share because the price has gone up. It is beneficial if the price goes down, but to start, buy stocks when the stock market is open. That way you know exactly what you're getting. I'm going to put a link in the comments so that if you want to sign up for Robinhood, you can use my link and we'll both get free stocks. It's a win-win, right? So that's all I want to talk about right now. Don't want to talk too long because I want to be able to keep your attention. So next week, we'll talk more about stocks. See you then.